Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar was mixed at the close of Thursday, having staged a strong foothold earlier in the week, has renewed short covering, returned demand to the top side of the range, which hit a high around 72.80. Now, from the rejection, the market did reach a trough around 72.21 after earlier on the economic front, Australia retail sales turnover fell negative 2.7% in July, according to the latest figures released today by the Australian Bureau of Statistics. This was the largest monthly dip this year. Although many await for the US Federal Reserve Chairman Jerome Powell's speech at Friday's virtual Jackson Hole Symposium, it is unlikely Powell will tip his hand regarding the tapering timeline, even though overnight there was some comments to the hawkish side, that is, from Dallas Fed President Robert Kaplan, as he went on to say that he believes the progress of the economic recovery warrants tapering of the Fed's asset purchase to commence in October or shortly after that. So turning our attention to the technical aspect, we can see that the sell-off today didn't quite break the midway point on the RSI. And from the rebound, along with the MACD, there is a slight potential of the bulls display another round of short covering. Resistance seen at 65, which may actually give way, but still seeing a cap around 73.15.30. Until we get a close underneath the level of 72.05.15, we may see further initial rebounds off that level. Looking at the euro, well, the market was a little bit choppy also, as the US dollar, which measures the greenback strength against a basket of 6 major currencies, recovers the level of 93 figure. Although there was some concerns over the developments in Afghanistan, while fears of a potential shift in the US Federal Reserve policy prompted a slightly broad sell-off in the euro. Still, nevertheless, the market's contained within the level of 116.75 to 117.18.95, where I believe this is where the cap is, and eventually we may see this market buckle as the RSI potentially may cut, as the dollar index could rally if we see a slightly hawkish view from Jerome Powell. But as I mentioned, he may not tilt his hand towards that side of the conversation, and if so, keeps things on relatively muted, then we may see a slightly weaker US dollar, and this would see further tests to that top side. So all eyes on Jerome Powell later today. The dollar yen took a brave stab again at the top side level around that 110 figure 20 level. Technically, though, we could still see a rise up towards this region again, but I still feel that there is a bear ambush awaiting, or more to the fact is we could see a bull trap and therefore see a rejection again and look back towards the 109 lows. The pound took a bit of a tumble overnight and now poses a further threat to the downside, even though we are seeing an attempt to recover into the European session. It is viewed that the rejection near that 137.60 with a cap at 138.20 could see a retest of the monthly lows seen around 135.80. This would mean that the rejection from 151.70 for sterling yen could actually look still towards that bottom side of the range at 149.2025, which I'm in favour of. But I would like to see a little bit more confirmation from the technicals. And finishing up with gold, well, the market's recovered back towards that 1,800 handle, but we still haven't seen a close above the level of 1,806 to support the next target of 1,830 to 35. If we see another foul test here, then we most probably see a re-challenge of the base at 1,770, and a close beneath there would reopen the view down to the low 1,700. The bulls are back when it comes to oil, and the reason behind that is there is a potential Gulf of Mexico hurricane heading its way, as reports come in that they are shutting down production in case of the hurricane forecast does hit at the weekend. It is still assessed from a technical point, though. The market is looking towards this $70 a barrel due to the recent surge, the break of this short-term trend, and also the technical supporting the upside case. Do we see a further rise beyond 70? I'd say unlikely. Most probably find a rejection from there and look back towards 66.5. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoyed a great start to the weekend.